you have a lot of inexperienced investors in the market.
Yep.
Inexperienced and then also speculators,
Yep.
right? And sometimes that goes hand in hand. But it's like, hey, the market is booming right now. Interest rates aren't that bad. Let's just buy and then hold on for just appreciation, and it'll come save us. Rising rents will always keep going up. Why would we think anything different? And we're obviously seeing just that, right? Rents are actually going down a little bit, right? They're flat. What they probably were anticipating hasn't come to fruition, and we're going to be able to reap the rewards. But yeah, they're still trying to like come out of it smelling like roses, even though they're trying to dump it.
Exactly.
And welcome to another episode of Real Estate Roundtable with MRTG Capital. My name is Tom Goodge, and as always, I'm here with my friend and business partner, Mr. Mike Rohm. How's it going, brother?
Oh, doing fantastic. How you doing?
I'm doing great. Here we are. It's the holiday season, and this time of year, I think, as with anybody, we're scrambling to see what deals we can get in right before the end of the year. We have been making we're sending out a ton of LOIs, ridiculous number. And we're super excited about that. Hopefully we'll be able to get some under wraps and under contract here soon enough. But yeah, today I'm just curious. I just want to, talk about like, what are we seeing right now in the market? I mean, we've been scrambling so much. This is like our therapy session almost, like to catch up to even talk about that. So let's just use this time in this episode to talk about what we're seeing, reflect a little bit on deals are doing and what's like in the market.
Yeah, I mean, the big thing we're seeing is there's inventory. Inventory is starting to come back from 2021, 2022, early 23, when there was no inventory out there to be able to purchase. You had to contact everybody off market, whatever it may be. Now we're starting to see them pop up on the listing sites. So what that means is people are starting to change to, have that, sellers are having that mindset of, all right, let's put it on the market. Let's get it sold for whatever reason. I mean, some of the properties that, we're evaluating and looking at were properties that investors purchased in 2021, even 2022. And now they're putting it back out there. And it's not like it was they bought it right. They bought too high. And now for whatever reason, it didn't go their way. Maybe they were inexperienced. Not really sure, but we're seeing these properties, they were held for a year to two and coming back on the market for the same thing they paid. So, we're running those numbers and they're still not making sense.
Well, I think, here's the thing though, right? I think you said something that was very key. You have a lot of inexperienced investors in the market, inexperienced, and then also speculators, right? And sometimes that goes hand in hand, but it's like, hey, the market is booming right now. Interest rates aren't that bad. Let's just buy and then hold on for just appreciation, and it'll come save us. Rising rents will always keep going up. Why would we think anything different? And we're obviously seeing just that, right? Rents are actually going down a little bit, right? They're flat. What they probably were anticipating hasn't come to fruition, and we're going to be able to reap the rewards. But yeah, they're still trying to like come out of it smelling like roses, even though they're trying to dump it.
Exactly. Well, and like you said, the rents are coming down. So it's one thing if you buy a building and renovate it, put in new cabinets, new countertops, new floors, whatever it may be aesthetically or efficiency, maybe new windows, new bathrooms, new furnaces to make it more efficient for the tenants. So you can raise rent, to whatever that market can sustain or whatever. These people purchased, didn't do anything, and wanted to raise rents, so like that's part of the problem. Someone told them they should buy real estate, inexperienced. They bought it. They paid too much, didn't do anything to them. And then they thought that the value was just going to go up. So now they're seeing, hey, what they paid it's not worth that.
That's right.
So we are, but again, it's a different aspect that we're seeing. Things are starting to come back on the market. They are starting to be available. So I don't want to say it makes things easier for us, but it gives us more to look at than just contacting off market, because we do that a lot. We contact these people who maybe they're interested in selling, maybe they haven't even thought about it. We reach out to them, and some are, hey, I'd be willing to sell at the right price or right evaluation, whatever it may be. Some are like, nope, I'm not interested. So but if it's on the market, it takes a guessing game off of us because we know they want to sell it. That's the whole point of putting it on the market, so
it's just coming to that price then as well.
exactly.
But the cool thing is though, like where we're at right now, we know that, interest rates will be going down at some point, right? In the next year.
Yep.
But we still have to, and we're still doing our underwriting, for around 8%. And the one cool thing is though, we're also seeing properties that, once again, that were bought in the last couple of years coming back up for one reason or the other, and having a nice, healthy mortgage on them still at, 3.5%, 4%. And that's one that is nice. The tricky part then is, once again, they're dumping it, not because it's not in the cycle that they should be in, right? Like this is not the time that you should be, but they bought wrong for some reason. And obviously they're not going to put all their cards on the table, but at the end of the day, they're still wanting to make that profit, even though the profit for them makes it so that the deal would never make any sense. And obviously we're not going to repeat their mistakes either. When we're coming with a deal for you, we've done our due diligence and it is safe in the sense of it's cash flowing from day one, not day 365. We're making sure that it is a good deal if it's a traditional multifamily investment. And that's where the rub comes into play, us having to send out all these LOIs and getting someone to actually say, yeah, okay, I'll agree to that price, getting the pain just enough.
Right. And you can tell where these investors are too in their cycle. Like you said, there's some of them that we're getting, and we're evaluating, say it's 50 units, and we see 10 of them are vacant. It's like, why are they vacant? Like they just don't want to do the turnover. They're becoming lazy investors or whatever it may be. It would benefit them if they had those units rented out. The numbers would look better, whatever it may be. They're just, nope, they're vacant. And that's how we're going to leave them. They need X amount of dollars per each of these units. We always, in our evaluations, we put X amount of dollars for each unit that we're going to fix it up one way or another. It has something going into it.
We're raising that value of that property some way.
Exactly. Again, making it more efficient for the tenant, whatever, for us, whatever it may be. But they're just leaving those units vacant. So you got to put a dollar amount to that for what that turnover is. So we are factoring that into, part of the purchase. All right. But once we get it up to that number of, if it's 50 units, 10 are vacant, we're going to say, we'll probably run a 5% vacancy rate. So we're going to have 2 to 3 units that are vacant. So we have 7 to 8 to play with that we can get rented out. And that goes into our numbers of what we factor in. Again, we see how the investor now who owns that property is just throw their hands up and, all right, I want to sell it. I'm done, so different times.
Oh, and it's interesting, right? So we're talking about, hey, what are we seeing today in the market, right? And it's interesting because as we go through all these new properties, what we're also seeing are property owners who were not reasonable, we'll say, coming back to us and touching base proactively as well.
Yeah.
You know who I'm thinking about? There's some that, that the fortunes of the follow-up, as we have learned in other industries as well. And that's true, obviously, when it comes to real estate.
Yep.
But it is funny, and it's just a telltale sign of the market and how things are changing when all of a sudden people are proactively following up with us. Like, hey, are you still in the market? Hey, just wanted to touch base. And it's like, oh, you're following up with us now. That's
right.
Like where this is going.
Right. Well, like you mentioned, we had a property that we're evaluating. They followed up a couple weeks ago and said, are you interested? We said, no, we evaluated. Here's the issues. Knew there was tenant issues. They didn't tell us, but we could see it in their numbers. They kept security deposits. People were late by 20 to 60 days. So this was all in their financials that we could see that they were late. And I laid it out to the realtor that, hey, it looks like there's tenant issues. It looks like tenants aren't paying. We're not interested in that market. They were those issues.
And to be very crisp for the audience here, we love distress.
Yes.
Right. We absolutely love distress. We don't want distress for a premium price. Right.
Correct.
So when you're trying to sell us roses.
Yes.
And Mike's like, hey, here's what we're seeing.
Yeah.
We don't want you at this price. If you want to talk lower where it should be, then we're all ears.
That's the difference. This property, they said that all units were renovated. Now, if you get into a tenant dispute who's not paying you, who's probably going to put holes in the wall, there's a difference, because they were trying to sell it as a turnkey ready investment, which the numbers were okay. But once you're dealing with the tenants, you got to pay cash for keys to get them out. You got to go through the judicial system to get them out. They damage the property because they're disgruntled, and you're talking this over a couple different tenants. You just went from $0 or a couple $1,000s to needing done on the whole building to $5,000 per unit of these people. So, like you said, there is different factors. But they followed up, and I laid out there, hey, there's these issues. We're not interested right now. Came back a couple weeks later and said, hey, they're willing to offer owner financing. Are you interested? And so we said, hey, send over the financials, whatever it may be. But
it still depends,
yeah,
right?
Right.
When we're looking at a deal for you, right? If we're going to bring a deal specifically to you to say, here is something that we have under contract, here are the numbers, right? Like, we're having to then explain to you, our investors, all right, here's your cash on cash return. Here's how much we're looking to raise for this, right? And the capital raise is not just the down payment and closing costs and things of that nature. Obviously, as Mikey talked about, right? We have to assume, and we're not looking at mostly turnkey as it is anyway, right? We're looking to help in some way. If it is turnkey and we get an amazing price, awesome. But turnkey normally means turnkey pricing, and it's not conducive to being able to get you the best cash on cash return, the internal rate of return, the average annual return, all these things that we're going to be talking to you about. We have to come at you with a good deal. And so when we're going through all of this, it's with you in mind, right? It's to be able to say, how can we get the best deal possible so that it makes sense for you to put your money in, so that your money is being put to work. When someone's just trying to say, hey, give me $5 million for my little shed that, has a lot of issues. And it's like, I can't make my investors money off of that.
Well, and that's the thing. Like, so that shows you where these sellers' mindsets are going, right now. So they don't know if we would pay the mortgage. Yes, it's owner financing. We would go through them as the bank. But right now, if you foreclose with a bank property, they spread that out across their whole portfolio. It's not a big deal. They spread it out, they resell it afterwards.
And we'll get a great deal there, right?
Absolutely.
Like, we came late to one deal. We're like, oh man, that sounds amazing.
Yeah. And so, but this seller, that could financially hurt them big if we didn't pay. So they're taking a huge risk, but that's what their mindset is. They want to sell the property. They're willing to take the risk. They just want it out of their hands. So now Tom and I start thinking, how low can we go then?
There's distress here. Obviously, you need to get out. Yep. So now we're talking. Let's actually, because who's financing? We don't care, right? It's the payment and how much are you getting back as an investor? That's all we care about,
right? But they're willing to take that against themselves. So that, again, they followed up with us and like, all right, they're trying to entice us even more and more. And so again, that's a little bit change in the market, that owner financing stuff really didn't happen 2021, 2022, unless it was at a premium price, because the sellers had to make it worth it. Now, I don't know. We're just, market's changing.
It is. Well, it's interesting too, not for the better, we'll say, but it's very interesting too for what we're seeing in the banks, right? Yeah. Like, whereas before it was like, hey, wide open market, United States, blue ocean opportunity, go ahead. You go to North Dakota, you go to Mississippi. Right now it's like, let's stay in this range right here, right? Like they're starting to get a little concerned because not us, but as you've heard, right, there are plenty of people who did not make wise investment decisions. Now, obviously, they qualified with the bank, they qualified for everything in it, but now they're in a spot, and the bank's gonna be like, oh, wait a second here. Like you said, like if they're starting to see in their portfolio people who didn't make good decisions, now that's where they start to just tighten things up a little bit and say, let's make sure.
Absolutely. And some of our bank contacts that's we discussed, they were going through some foreclosures, and we had those discussions. We said, hey, let us know those properties. We'll evaluate them. If they're worth it,
let's help you.
Yeah, we'll take a look at it. So they were thankful. Now, it was a package deal. They didn't make sense financially. The problem is the previous people who foreclosed on it didn't purchase correctly. They overpaid for the buildings, and then now the bank, unfortunately, approved them for the total amount. So now they're cautious on those. But those are the kind of relationships we have, is the banks are calling us and asking us, hey, can you take a look at these? Are you interested? We can clear them from our books. And if you get a good enough deal, does it make sense? But unfortunately, those ones right now didn't. In the future, maybe they will, but they haven't hit the market. That's usually the banks just put them out on the market and see how they go. So, I mean, those are kind of relationships we're building in the backgrounds and continuing.
And in wrapping, I think the big thing, like we as real estate investors, right, just even as a community, when we saw the crazy, inflation taking place, when we saw all of the corrections that were taking place in the market, we assumed that a lot of corrections would have taken place for what, some of the bad decisions that investors made, probably just a little bit quicker. We're starting to see that now, right? It wasn't as quick. And that's probably just because you want things to happen quickly, right? Yeah. Like in real estate, nothing happens quickly. And we're starting to see it now, and it will be a tsunami here that everyone's been forecasting, right? There's going to be a lot of great deals out there, and you'll have to be positioned correctly. And that's just pretty much, the net of what we're doing, right? Everything that we do is based upon numbers that make sense for investors. And if they don't make sense from an investment standpoint, if we can't confidently go to you and say, hey, this is a great deal, it's not being done. And if that means that we're making less deals happen and we're positioned correctly for when all the deals do come in place, the last thing you want on your books are a ton of subpar / not the greatest deals that you're hoping will do well, right? When you start saying hope and there's not facts behind and data behind how that's going to happen, then you're going to be in trouble. So that's one thing I said. I feel good. This year has been a tough one, to say the least. But at the end of the day, the work that we have put in has been very solid, and I think positioning us well. And even some of the offers that we've put out recently, right? If any of this come to fruition, will be still great investments for our investors. Be excited for them, and just excited for what the new year is going to bring.
Absolutely, yeah. There's hopefully rates drop like they're talking about. But like you said, we evaluated on today's rates. We know what they are. That's how we have to look at the property. We can wish and hope that things go the right direction. They may not, but
eventually they'll get there.
Yeah.
And that will help your IRR, right? There's different metrics that we talk about over time. Those averages will be amazing.
Yes.
But they need to look good from day one is the biggest thing for sure. Anything else, brother?
I think that's a great synopsis of what the market looks like now and kind of hopefully where we're going and things like that. The changes that we have seen since we're in it day to day, what it has looked like over the past couple months to last year, everything else, especially wrap up this year, and we'll see how 2024 goes.
Keep rocking and rolling.
Absolutely.
Well, as always, stay invested and stay informed. Till next time, thanks everyone.
Thanks.
If you would like to connect, please head on over to mrtgcapital.com and request time to meet with us to answer any questions you may have about real estate investing through a syndication. We partner with small groups of investors just like you, and we're always reviewing deals that could be of interest to you.